Fortinet stock is down about 23% after they've announced their recent quarter earnings. The stock is currently trading at about $57 with a market cap of about $44 billion. In this video, I'm going to talk about whether this is an overreaction or a great buying opportunity. Previously, a few months ago, I made a video on Fortinet when it was trading at about $68, and I've shown you two valuations, one with reasonable assumptions and the other with great execution. And based on those valuations, I've mentioned that $68 is a good price to start a position, but it has to fall to about $56 for me to take a significant position. Now it is at $56. So what has happened that reduced the stock price to $56? So let's look at the recent quarter earnings. As you can see on the screen, the revenue miss was minus 0.72%. And that is not a significant miss because the Wall Street was expecting $1.3 billion of revenue and Fortinet made $1.29 billion of revenue. So we cannot take this miss seriously. Look at the EPS. EPS, they beat by 10.69%. It means that Fortinet's profit margins are increasing, which is actually good news. Now that we have established that the recent quarter results were good, what has caused the stock to drop? Let's now look at the guidance. Fortinet did lower their revenue guidance. They're saying they can only make between $5.35 to about $5.45 billion this year, which represents about 22% year-over-year growth. And that is down from $5.425 billion to about $5.485 billion. So that's not a huge reduction in revenue growth. So that should not have upset the shareholders. And in addition, Fortinet is saying that the adjusted net income per share is going to be higher this year. They're saying they can make anywhere between $1.49 to about $1.53 in EPS, which is an increase from the previous guidance of $1.44 to $1.48 per share. So expansion of margins is actually good, and even though they have reduced their revenue guidance, it's not too significant. Now let's finally look at what has upset the investors. I'm showing that on a screenshot. As you can see, for the billings, they're saying the growth would only be 12.7% in the next quarter. And for the full year, they're saying the billings would only increase by 16.9%. So why is this a concern? Let me show you another screenshot which shows the relationship between billings and revenue growth. Billings actually convert to revenue because billings is the money that would be guaranteed to become revenue in future, right? So billing growth and revenue growth go hand in hand. This indicates that if Fortinet's billings continue to reduce in the coming quarters, their revenue will also have to reduce in the coming quarters. The revenue may not see this effect this year because they're saying the revenue will still be growing by about 22.3%, but the effect of this reduced billings will be felt down the line, maybe in Q1 of 2024 or Q2 of 2024. So this is the reason why the stock has sold off. Investors are worried that the revenue growth for Fortinet is going to decelerate in the future because the billings are also decelerating. This has also led to the sell-off of other stocks like CrowdStrike, SentinelOne, Palo Alto Networks, Zscaler, etc. But we have to wait and see their earnings to confirm whether this is an industry-wide trend or it is specific to Fortinet. In either case, I continue to believe that cybersecurity is an important theme for this decade. Right now, because of the macroeconomic environment, a lot of companies are reducing their spending. Even though there is slight deceleration in billings in the coming quarters, I believe that they're going to increase again once the macroeconomic environment gets better. As you can see on the screen, I continue to believe that they can maintain 20% annual growth in revenue for the next 5 years on an average, which would get them close to $11.3 billion of revenue. With a net profit margin of 25%, they can make about $2.84 billion of net income in 2027. With respect to the number of outstanding shares, since Fortinet is already a profitable company and has a lot of free cash flow, they would buy back the shares. That's my assumption. With that, the stock price would be about $107. Since the stock price is about $57 now, this represents a gain of about 80% plus in the coming 5 years, which is very attractive. Let me now show you another screenshot for great execution case in which I'm penciling out $126 stock price for Fortinet in 2027. Since the stock price is $57 now, the $126 price tag in 2027 represents more than 100% gain, which is very, very attractive. Even if I keep these two valuations aside, the price to sales for this company is about 8 because this company's market cap is about $44 billion now. And they are saying they can make close to $5.4 billion of revenue. So when I divide the $44 billion with $5.4 billion, that gives me a price to sales of about 8, which is actually cheap for a company like Fortinet, which is growing in double digits and is also profitable with close to 25% net profit margins. In conclusion, I think this is a great opportunity to buy Fortinet stock at about $57, and I continue to believe that the upside is about 80% in the next 5 years with reasonable assumptions. Let me know your thoughts in the comments. Thank you so much for watching.